Welcome to Digital Asset News. Today, instead of talking about the news, I want to bring you behind the scenes. We're going to talk about how we purchased this seven-figure home here in Puerto Rico using 100% upfront cash using crypto. And to do that, we need to take a look at a little bit of history, talk about how we got here. We're going to take a look at the what and the whys as far as like why this house and what we were looking for. We're going to take a look at how we did it, which is the nuts and bolts, which is, it's an important piece, but it's probably the third most important. The second most important is the mindset or investor mindset. And to help us with that, I'm going to bring in Anthony SCARAMUCCI from Skybridge Capital. We'll talk about what it takes to really just have that investor mindset and just kind of plow through. And then lastly, we're going to take a look at which is, I think, the most important parts, which is margin calls, the plan going forward, and then, of course, the big question, which is why do we do all these things that we do? And that, I think, is the most important thing. So we'll do that at the very end. So before we get into all that stuff, let's take a little bit of history. So first of all, my name is Rob. This is Digital Asset News. I created this a couple of years ago for this channel because when I got in 2017, crypto was just really popping off at that point. And I thought I was a genius because I just dumped a bunch of money into crypto. And then, of course, that was in December 2017. And within 3 to 7 weeks or so, I saw the value of my portfolio go down by roughly 70 to 80%. And of course, when you do something like that, when you get kicked in the teeth, you start to figure out that, hey, I need to do something a little bit better. And that's when I learned about the principles of as far as like investing, value cost average, dollar cost averaging, and just kind of be around here for the long run. Now, in crypto, people will talk about, well, there's a lot of things that you can get into and really make a lot of money, and you can. However, those are few and far between, and I think that this is probably the best asymmetrical bet you can get as far as investing, but it is not a get-rich-quick scheme, and to really get into it, you really have to have the right mindset. So the history before even crypto was I was in the military, 91 Bravo, which is a medic. Got out of there, did 20 plus years in the healthcare industry, then started up my own businesses, sports facility, real estate investing, short-term rentals, and it's been pretty good. And then that brings us up to this point of today. Now with crypto and digital assets, unfortunately, you will see that there's this thing called capital gains tax, and it depends on if it's long-term or short-term. So every time you sell your crypto, you could be subject to short-term or long-term. Long-term capital gains is if you buy and hold for over a year and then you sell it after that. Short-term capital gains tax, that is less than a year. So in short-term capital gains, whatever your tax bracket is, that's what you will get charged for that. So if you're in like 25%, 35%, 33, 40%, or whatever else it is, that's how much you'll pay in capital gains. If it's long-term, longer than a year, it's around 20% here in the States. And of course, in different countries, it'll vary from place to place. So with that, you have to understand that I'm not a big fan of paying a boatload of taxes. So what we did is we legally, that's the key word here, moved over to Puerto Rico because here you pay 0.0% in capital gains tax. Now we did a video and you can watch that. I'll link it right here, and then also at the very end, which explains all the different legalities and how to do those things in the right and proper way. So that brings us to what are we doing here in Puerto Rico? So when we got here, me and my wife, we've been here since April or so. We've been bouncing around at different Airbnbs. So we had to take a look at what do we want and why do we want it? Well, we want, for us like the housing, we wanted a place that, looked pretty good. Like you can see right here, very spacious, beautiful house, something with a pretty big backyard because we have 2 dogs, we have family, grandkids will come over when they get out of the United States, come over here. So we wanted to have something like that. Also, what we wanted is some kind of a pretty nice looking house that when we are not here in Puerto Rico, because we're going to be traveling, we want to be able to rent that out on short-term rental sites like Airbnb and Vrbo. So this was the perfect place. So that takes care of the what and the why. Of course, so why I want to do it. We don't want to just bounce around in a bunch of different Airbnb short-term rentals. We wanted to get something like this, have it there, build some equity, use it also for tax incentives. And of course, the places that we live in, because we have homes in Texas and Houston and El Paso, and now here in Puerto Rico, condos, and of course this place, this just allows us to really just go where we want to go, and then it pays for itself because people stay in our homes for short-term rentals. Now it gets into the how, and this is what you're here for, I understand, and this is probably the one that's probably the most important for some people, but it's not the big story. But this is how we did it. So first of all, I'm just going to say this is a seven-figure home. I'm not going to say the exact price, but for round numbers, let's just say it's $1 million. All right, so it's $1 million. So the initial how to do this would be very simple. If we're doing for a investment property, you have to put 30% down, and then you will use the bank, and you'll get a loan for 70%. Since this is going to be our homestead, the other place that we have our investment properties, we can do it at 20% down. Great. And then we have we'll finance the rest through the bank. And here in Puerto Rico, it'll take about 7 to 12 weeks to get a loan. Just takes a little bit of time, whatever. So for this one, you have to understand, we said, well, what we'll do is we'll do cash. So we're going to need about, let me do some quick math, 10% of $1 million, $100,000. We need $100,000 in cash. And the other part will be the crypto loan, which I'll get to that in a second. So to do the actual cash part, to have 100,000 on the side, that could be taken from a number of sources. And we had cash in our bank accounts from a lot of different things from our different businesses. But one of the big one of the parts of how we had cash in our accounts was I like to dollar cost average in as far as into crypto and digital assets, also into stocks as well. I don't really own that many, but I also like to dollar cost average out. And I do that through this thing called an exit strategy. And people will ask me a lot, they'll say, Rob, well, I don't, where is that? And that is in a link in the description of every one of my videos, and it's been there for over a year and a half. It's like one of the very first videos that I actually did about exit strategies and what I planned to do. So to take a look at this, let me just blow this up so you can actually see it. So here, this is the exit strategy itself. And underneath there, you can see that little thing. It says, why not just hold onto your Bitcoin until it hits 150,000? Because when I do exit strategies, I take a look at the price and I use fractals and just go, okay, well, for my prediction of where I think things are going, I thought that Bitcoin would hit around 150,000 by December 31st, 2021. And a lot of people were wrong. So I will stand up and say, that didn't hit that. But what I did was I said, okay, I'm going to have these selling points along the way. At 60,000, I'm going to take 20% out of my portfolio. 80,000, another 20%. 110,000, 20. And then this one, as you can see, is that it does equal up to 100%, but that's of 80%, or actually, excuse me, 50% of my entire crypto, or as far as like the Bitcoin that I have. So I'm never going to sell all of my crypto because there's always a chance it can go way, way up. So that's what I do. And then people again will always ask me, well, Rob, why don't you just hold the 150K and then sell it all? Because I lived through 2017. And just like I showed you before, you think that it's going to go to $1 million, and that's really not the case. So there is one thing that I got right, which was you have to sell at some point. So to break this down even further, this is what I did. So at $60,000, when I hit that point, I sold 20% of my Bitcoin. And this is just round numbers to make it very simple. It was a little bit more than this, but I sold quite a bit, or 20%. And people, of course, were like, Rob, you're a moron. And I'm like, well, that's debatable. Ask my wife. But, in this situation, it actually worked out pretty well for me. So there was a couple things I was right. One, I was right to take the profits. And before we go on, this is investment opinion, not investment advice. My goals are not your goals. If you want to hold Bitcoin till it goes up to $5-10 million, be my guest. That sounds great. But the thing is that, remember, anytime that you sell your crypto and announce it, everybody's going to call you a moron because they'll be like, oh, you moron, you sold your Bitcoin at 10 million. Don't you know it's going to 20 million? Sure. So the thing is like, am I going to be like Smeagol the whole time as far as like Lord of the Rings and just go, my precious, and hold on to it forever? Or do I want to buy some things and actually live my life and actually do the things I need to do with it? So it's an all-encompassing thing. And again, I don't sell all of my crypto. So this is where we are right now. So I sold 60,000 or at 60,000, and then also I had said before that people said, no, Rob, you don't understand. Because in 2017, there's so many institutions now, they'll never sell and it'll keep going up. Well, guess what? People are still greedy and they still like to sell things. So I never, paid attention to that. That made no sense to me. So that was Bitcoin. And then also for Ethereum, same thing happened with Ethereum. When Ethereum hit 2,000, I sold 20%. It almost hit 5,000, or my goal of 4868 just didn't hit it. So I didn't sell. And again, it's one of those things where it just didn't happen. Now, on Theta, another cryptocurrency that I owned, I actually did hit it right. I thought that Theta would go above $10, and it did. I think it went to $15, $25, somewhere around, I forgot. And on this point, what I did is I actually still messed up. And what I did was I sold 20% when it hit $5. Or 488. I always like to go a little bit below the numbers because everybody likes to sell around numbers, so I like to get it in a little bit earlier. At $6.91, I sold 20%. At around $8.50, I sold another 20%. And then it went to 9, and I got greedy and thought it would go to 10, and it did. And then when it went to 10, I'm like, it'll go to 15. Then when it went to 15, I'm like, it'll go to 30. And of course it didn't. And I missed out on some gains, and I should have taken some more gains, but I didn't. But I got greedy. But hey, I did hit the 60%. And that's one more thing to remember, is that time in the market is more important than timing the market. Very famous, one of the great investors said that they make a lot of money by always selling too early and never buying at the very absolute bottom. And that's just really what it comes down to. So also, if we take a look at my Cardano, this is another prediction that actually got, for some reason, I got right. I thought it was going to go $3. Unfortunately, I didn't do what I was supposed to do. I just got a little too greedy and I didn't sell. So I know moving forward, this is just the things that I have to work on as an investor, is if you have a plan, stick to the damn plan. So that's what I did. I took 60%, worked out pretty well. And so now, bang, I've got my cash on hand and everything's good. And some of that came from the crypto sales and some of that came from the other businesses. So I'm like, great, I've got it. Actually, I had more than that. So I was pretty happy at this point. The next part was, well, now I need a crypto loan. Now, how am I going to do that? Because with crypto loans, just so you know, when you sell your crypto, those are capital gains, except if you're in a place where they don't have capital gains tax. But crypto loans, there are no taxes on crypto loans. You're going to pay the interest, whatever that is, but since you pay it back, there's no capital gains tax on the loans that you take out, which is why some pretty big names like Michael Saylor will talk about, taking out crypto loans, but and he talks about using that for everyday stuff. I disagree with him. I think that if you're going to take a crypto loan out, it has to be something like an asset that will actually appreciate or do something for you, or be Airbnb, Verbo, or something like that, or a business, something that will actually make you money, and not like you're going to take a $1 million loan and go, here's $1 million, Ferrari or something like that, or Lambo. So don't just stick into stuff that depreciate. If you're going to take a crypto loan, again, not financial advice, just financial opinion, just make sure that it's actually going to use and makes you money. So other than that, it's worthless. So for the crypto loan, I use Celsius. And for Celsius, you can see right here, this is what, when you open up the Celsius app, this is with Alex Mashinsky. I've been with them for well over a year now, and it's great. Like, I put my crypto into Celsius, I gain the yield, because you can see and I blocked out how much I have, but like on Chainlink, it says 3% right here. That's how much I actually get per, what is that, per month, 3% as far as like a yield itself. And then Stellar is at 1%. Ooh, watch out. And then Celsius is 5%. And then Bitcoin right here, you see I've got $7,300, and that's going to give me 6.2%. Which in the grand scheme of things is actually pretty good, 6.2%. Okay, so what you're gonna do is on the bottom right-hand corner, see that C right there? You're gonna click on that C, it's gonna bring up a nice little menu, and you're gonna click on borrow. Now, just so you know, in different districts and different countries and things like that, it's not gonna be there. So first thing I'd say is update your app. Maybe it's going to be there or not, but if it's not there, you're not eligible. You can reach out to Celsius, you can look in the FAQ, but in different places, this is not available, just so you know. But here in the States, yeah, it is. So we're going to borrow that. And then of course, right here, it's going to say apply for a loan. On this next screen, you're going to have all your active loans. And I got many because I took out different loans for down payments for condos and different houses and all that. And it works out pretty well. It's very fast. It's way easier than using a bank. I'll tell you that right now. So we're going to click on apply for a loan. And then here you pick your poison. You want to borrow stable coins or dollars. Up to you. I like I'll use dollars because that's what the seller asked for. So I'm like, sure, whatever. And then it says how much you want to borrow. So this is just an example. Okay, so I'm just going to borrow $500, and it's going to tell you the max of whatever else it is. And you're just going to choose the collateral on the next screen. So we're going to click on that. And here, just to make this very simple, I'm just going to choose Bitcoin to make it super simple. So like, I'm just going to click Bitcoin there, and it's going to ask me on the next screen is like, well, how much you want to do. But before that, see that 6.2%? Remember we talked about that? 6.2. When I do the loan, just so you know, you will not gain the yield of it just sitting there. So when you get a loan from Celsius or most anybody, they're going to rehypothecate it, and they're going to ask you for double, triple, or quadruple the collateral, right? So in this case, since I put $500 in, it's going to be either 1,000, 1,500, or 2,000, and that interest that I would have gained just by having it sit there goes away, because they're going to take that my crypto and do whatever they want with it, because that's the collateral part. So 6.2% is gone, and I'm going to pay interest on that. And here is what I can potentially pay. And again, this is 50% loan to value, LTV. So if I want to put up just 50%, so if I want $500, they're going to say, well, what are you going to give me? Well, give me $1,000 worth of Bitcoin, and I'll give you this loan at 9%. Okay, well, I don't want that because that's too high of an interest rate. Okay, well, give me triple. Give me $1,500 of Bitcoin, and I'll give you $500, but you're gonna pay 7%. I don't want that. Okay, well, 4x it. Give me $2,000 worth of Bitcoin. You'll only pay 1%, and I'll give you $500. Okay, something like that. So like on this one, I'm just gonna go for the middle part to make it simple, just to show you the example. Then you're gonna go through, do you wanna do it 6 months, 12 months, 18 months? Before you ask, yes, after 36 months, you can just re-up the loan. So believe me, they're not gonna be like, no, we don't want you to pay us the interest. So trust me, they'll take it. And then moving forward, then it's gonna say, how do you wanna do this? Because if you want cash, they're going to ask you for a bank account. I use USAA, military. I love it. Does what it says it's going to do. And now we go through the process. Yeah, I want $500. Here's my collateral, 0.03, 12 months, 7%. So I got to give them roughly $1,500 worth of Bitcoin. They're going to be $500. And then underneath here is the most important part. This is called the margin call, Bitcoin margin call. So if Bitcoin today is 43,000, if it drops to that loan to value ratio below a certain part, it's like roughly around 65%. They're going to say, look, if it goes to 22,287, and this is all different for whatever you're going to get, whatever the amount that you're going to do, but in this one, 65%, they're going to say, this is what you have to be aware of. And if it drops below this price of 22,000, you don't have the correct loan to value, and you're going to have to collateralize more crypto. And if you don't do it and it slips down to 80% loan to value ratio, then we're going to liquidate you at 18,103 or 108. You do not want that to happen, because if they liquidate you, now it becomes a taxable event. So always, when they reach out to you, which they'll reach out to you continuously, make sure you're like, I'll work with you. I'll do what we have to do. And then also they can help you out by on the app itself. If you have other crypto on there, because you can't take Bitcoin and Chainlink and Aave and blah, 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 and roll them all together and get one loan. They can't do that yet. It has to be like Bitcoin to Bitcoin or whatever else. So like in this situation, they'll say, whatever you have on the Celsius app, we can collateralize on that. That's to help you collateralize, and we'll help you out. But if not, like on a situation with me, like I bought a bunch of Ethereum, and guess what happened to Ethereum? It dropped like 25% in a week. So I had a margin call, and I had to recollateralize, or else they would have liquidated me. So, and that's why the plan going forward is to get these loans in crypto, but then at some point, which we're going through the process right now, is to actually get a loan to the bank, because it's only 4%. And we want to do this, give this away because, well, we'll get to that in a second. So great. I've got I got cash, I got my crypto loan. And then just so you know, like when you do that, it's super simple. It goes into your account like that. It's usually like in 24 hours or less. All they do is just verify who you say you are, and that's it. So I'm like, good, I'm good to go. Went back to the agent and they said, oh, not so fast. Guess what? We don't want to wait for the loan from the bank, which is going to take, 10, 12 weeks. You got to, for this house, because we're in Puerto Rico and there's such a huge demand, thanks Fed Reserve, and well, thanks for everything. I mean, the CPI numbers just came out. It's just insane, inflation, whatever else. So there's so much demand and the prices are inflated. They're like, if you want this house, it's going to be cash only. And that's actually what we did with our condos, or one of our condos. And we didn't think it was going to happen with this house, but they're like, yeah, it's going to be cash only because we've got so many buyers in rears. So if you want this, got to be cash. Now we have to go back to the drawing board. We're like, shoot, okay. So we still got that 100,000 in cash just sitting there. Plus we got some other ones, but we don't want to spend all our cash or a good chunk of our cash because we use those for other businesses, and we like dry powder when we want to buy the dips, right? We talk about. So what we're going to do is we're going to do a crypto loan of 40%. We're going to go from 10% up to 40%, just collateralize more of the crypto. Sure, no big deal. And then the other 50%, we had a guy who was going to be a private loan, and they were going to give us 50% at a pretty high rate, honestly, for the private loans. But we were like, no big deal, because in 2-3 months we'll get a loan from the bank, and we'll just get in the house. No big deal. But I had a feeling, and I was right, that the private loan would fall through for some reason. And if I collateralized all my crypto, because remember, if I need, in this case, 400,000. If I needed 400,000, I need to collateralize up to double 800,000, or triple 1.2 million, or quadruple 1.6 million, just to get 40% out for our 400,000 or whatever it was at that point. So if I do that, I got a lot of crypto to be locked up, and then the margin calls would be a huge headache. So I'm like, I don't know if I want to do all that. So I saw what was going to happen with this private loan, and guess what? Son of a gun, fell through. So, I mean, what are you going to do? Because when we do the 10%, we did that as a down payment. And if you don't go through with this, you null and void the contract, and they keep the 100,000. I'm not in the business of losing money. So what I said was, my wife, we sat down and go, this is what we're going to do. We're going to take the 30% in cash, roughly 300,000, whatever it was, for in this example, and we're going to put cash down straight. We're going to go back, get a crypto loan for Celsius. Instead of 40%, 30%. We're going to collateralize that. And then what we're going to do is we're going to sell off our crypto. Now, I have to tell you right now, I was in not a great mood to do this. But these are the things that we have to do when the time is right. And this was the perfect timing. So end of November, early December, I sold off a bunch of crypto because I had to. I didn't want to, because on my videos, I was fairly certain December was going to be fireworks. I was talking about it all the time. Didn't happen. So when I was selling these things off, Bitcoin, Ethereum, Solana, Cardano, Avalanche, Aave, Chainlink, and I was selling and selling and selling. I was like, I go, this is going to be what I'm selling it for, I'm going to lose 2x, 3x, 4x, 5x because it's going to go up in December. And it didn't happen that way. So it was a good lesson for me that things tend to work out for a reason when they're supposed to. And actually, after I sold off, things started to even go down, and then December it went down. Today they're recovering, but it worked out pretty well, in all honesty. So that takes us through for the how. And of course, this can be done in a litany of different ways, but the next part is in my opinion, the second most important part, which is the mindset. So for me to get here for those 4 years, because I was so stubborn and I was dollar cost average, what is the mindset? So I'm going to bring in Anthony SCARAMUCCI from SkyBridge Capital, and he's going to talk to us about how he gets his clients to get into crypto, because it's not very easy. He's from traditional finance space, and it's one thing when you have like $1,000, $2,000, and you're like, well, I'll just let that ride. But what's another thing when you have like $1 million, $10 million, $100 million, like with Anthony and SkyBridge and his investment funds? A little bit different case. So let's take a listen to a guy who does it for his job. So everybody, as promised, I brought in someone that can help us get that investor mindset. This is Anthony SCARAMUCCI, founder at SkyBridge Capital. Anthony, thanks for coming in.
Great to be on. Thank you for having me, and I enjoy your work.
Great. So let's get into it because we're busy. So the first question I got for you is this, because it all comes down to the mentality. And for you guys to get things done, you have to be like the coach and all the players that you have as you bring in the investment. So the first question I have is, as far as your mentality is, why Bitcoin, and have you had doubts along the way?
Well, here's what I would say. I was a Bitcoin skeptic. When I was introduced to Bitcoin by the Winklevoss brothers, I didn't fully understand it. They were explaining it to me. And I said, okay, it sounds interesting. People are joining that quote unquote community. The price is rising. What would have to happen for me to get very interested? And I'm an institutionalist. Unfortunately, Rob, I grew up old school, trained in sort of value investing. And so I missed some of the technology boom, like companies like Amazon. I did not want to miss the next wave. And so I wrote down in my notebook, I said, if Bitcoin has 100 million wallets, if it's easy to store and I can put 9 figures in it without worrying about it, and the regulation is going to be okay around Bitcoin in the United States, forget about China, but in the United States, I'm going to start investing. All 3 of those things happened in October of 2020. Right. We put $270 million in Bitcoin across our product platform. And so my clients came into Bitcoin, Rob, kicking and screaming. What the hell are you doing? Warren Buffett says it's rat poison. Other people like Jamie Dimon say it's worthless. What are you doing? And this is where a good financial advisor, a good fiduciary comes in. I used this story once. The Payson family was told by their art dealer to buy the Van Gogh Flowers painting. They bought it in 1933. They spent $1 million on it. They sold it in 1987 for $40+ million. That was the highest purchase ever at that time. But it was because they had a good art dealer, and the art dealer understood value. And even though they didn't want to buy it, they forced their hand to buy it. I had a institutional investor that called me after I made the position, said, I'm going to fire you. I'm going to put the notice in for the redemption on your fund. I said, okay. I said, but please don't do that. Give me a chance to talk to you, grab you by the face mask, pull your mask towards me, and explain to you what we're doing and why. And once I did that, he said, okay, I'll give you a year. At the end of the year, despite Bitcoin's volatility, it was a quite successful year, up 50 to 60%, depending on when you're marking it. He called me and said, thank you for bringing me into the 21st century. I've done a tremendous amount of homework on Bitcoin, Ethereum, DeFi in general, and you probably don't own enough Bitcoin. And I laughed. I said, well, we're getting there. Trust me. And if I'm right about appreciation, we don't even have to buy any more Bitcoin. It'll start to bracket creep in our portfolio in terms of the percentage allocation. So, yes, I started out as a skeptic, but I'll tell one quick story if you don't mind.
Sure.
That's about El Salvador. The El Salvadorians, many of which live in the United States now as expats, they send money back to their folks in El Salvador. The past practices, they had to go to Western Union. You want to send $1,000 back to El Salvador and you're underbanked. You go to Western Union with the cash. You hand the cash over to the Western Union people. They charge you 7%. Send the money to El Salvador. Your mom picks it up in El Salvador. They hit her for 1%. There, it's an 8% charge. Mom gets $9.20. You lost $80 in the transaction. Okay, since the El Salvadorian government put Bitcoin in place, there is wallet-to-wallet transfers now between the expat community and the El Salvadorian natives. And right now, we have estimated that over $400 million has been saved bypassing Western Union. And I can't think of a more visceral, more direct fact set than that to explain what is happening in terms of the transformation of finance, and where Bitcoin and Ethereum and other tokens like Algorand, et cetera, will have a role in the future of decentralized finance. It's an empowerment instrument. It's a fee saver. It's a delayering mechanism for the economy. It'll make the economy tremendously, exponentially more efficient. And I think that's one of the best examples I can use.
Yeah, makes a lot of sense. And then just like, because when you said that you missed out, and all the things you said were great. And what you said before, you said that you missed out on Amazon. And I remember why you missed out on Amazon. It was because of Warren Buffett. I remember that you listened to Warren Buffett, or actually you had Bezos up and he was talking about how great it was. And then Warren Buffett came out and said, no, I don't understand what's going on. Warren Buffett said that about Amazon. He said that about Google. And he also said about Bitcoin. I think we're in good company right now. So that is just that first part. I'm glad you're here to help people get their head around it and to where they should actually be looking to invest. I guess that kind of answers my second question is how do you get your clients into Bitcoin and crypto?
So
those types of things.
Kicking and screaming, many of them kicking and screaming. And basically they gave me discretion on their money. So I just put it in there. And like I said, some people redeemed on me for that, and that's fine. And other people I was able to convince that would be a mistake to redeem. The secondary thing that I think I've done is join podcasts like yours. I've joined the community. I got out there to speak. I wrote a book called The Sweet Life with Bitcoin, how to stop worrying about cryptocurrency, and how I learned to stop worrying about cryptocurrency, and you should too. It's a 100-page little book. And I've started the proselytation because I think it's so necessary for what's going to happen. You brought up Amazon. Amazon is very, very volatile in the early years of Amazon. Today, it is amazingly stable 25 years since its public offering. If you invested $10,000 on Amazon's IPO, it's worth $22 million today.
Right.
However, you would have had to subject yourself to 8 periods of time where Amazon lost at least 50% of its value. One period of time, it went down 90. And so if you want to embrace new technologies, there will be volatility, there'll be fear, there'll be uncertainty, there will be doubt. But you know what else there will be? An exponential opportunity for growth and to participate in the future of commerce. And that's Bitcoin, that's Ethereum, that's the world of DeFi right now.
Gotcha. So yeah, that is what I'm trying to do right now with my family, but it's easier said than done, which leads us to the next question. How do you handle your clients with their emotions and the volatility that's going on? Because we can say a good story, it's going to happen, but it's another thing when things go down 50, 60, 70, 80%.
So I have to size clients appropriately. And so what I tell people, volatility is not necessarily a measure of risk. Jeff Bezos was once asked on the 20th anniversary of Amazon, they turned to Jeff and said, well, very successful story, but man, you had tremendous volatility over the years, referencing those downdrafts. They said, well, how did you handle the volatility? And Jeff looked at the interview and said, well, I didn't really look at it. What I was focused on was users and revenues. And every day when I woke up, the users were up and the revenues were up. The stock was doing this like an EKG, but my trajectory was that. And something, I knew eventually these two things would marry each other. I'll use a Buffett aphorism here. The stock market or the cryptocurrency markets, they are popularity or voting machines in the short run, but I think that they're weighing machines in the long run where they weigh fundamentals. And so with Bitcoin now, remember I said it got to 100 million wallets in October of 2020. Glassnode reported on December 31st that Bitcoin wallets are now about 240 million Bitcoin wallets globally, 49 million Bitcoin wallets in the United States. Of course, Coinbase has 73 million accounts globally. Just to give you a sense of the size and scope and scale of where things are going. And so for me, I tell people users are going up. Volatility is the price that you pay for growth. There's a reason why the legendary investor Bill Miller has several $1 billion. He's got 50% of his money in Amazon, 50% of his money in Bitcoin. You are being paid for that volatility. And so you need to be patient, not look at the screen, and treat it as a long-term asset.
Yeah. And then for all these great investors, you got the Bill Millers, the Druckenmillers, the Paul Tudor Jones, they're really getting into it. But how is everything looked at by you guys? Because you guys are traditional finance. How is Skybridge looked at by your peers right now? Because are you guys the cutting edge or just some people that are out there on the fringe? I mean, I think I know where we're going, but I'm just curious to see what...
listen, I'm pretty self-aware. I think people think we're nuts. Okay, who's kidding who? I think they think that we're out there on the fringe. They think that we're taking exogenous risk with client money and we're being irresponsible. But I'll point out, my Bitcoin position started at a 4% position. It got to 22%. It's currently at 17. I didn't add any to the position. It just went up and came down a little bit. And so people, well, he's irresponsible. He's got 70% of his money in Bitcoin. But ladies and gentlemen, my cash allocation was 4%. I think that was a propitious, and I think it was a specific allocation around sizing and safety. And so I like to think that we're innovators. I like to think that we're breaking new ground for people and we're helping to push people forward in the world. But my naysayers and my competitors are, of course, going to say that we're nuts. And you live with that in life if you are trying to shatter false totems and shatter the institutionalization of the past.
That's right. You're crazy until you're successful, and then you're a genius.
Exactly. That's how it works.
And then so the last one, because time is short. There's only a handful of funds out there, hedge funds, that beat the simple buy and hold S&P 500. It was either 3 or 4 last year. Out of all those went out there. So my question is this: why aren't more hedge funds, such as you guys, which are getting to it right now, why aren't they recommending to all their clients get into crypto at least 1% to 3%, which is what Ray Dalio suggests? I just don't understand this whole part.
Yeah, well, I think again, there's old style institutional thinking. Skybridge did not outperform the markets last year, but we did outperform the hedge fund index and the fund of fund index. And that's what our target was. Remember, our clients, the institutions, when they put money in hedge funds, they're not necessarily looking for us to outperform the S&P 500. They just want a total return with less volatility, and they want it to be sort of the intersection of the stock and bond market. And given where bonds are right now, an 11 or 12% return in a blended diversified portfolio like Skybridge, our clients are very, very happy. Having said that, when Ray Dalio says 1% to 3%, you and I both know that that's low. It should probably be 3 to 5%, but he's trying to nudge people. He's trying to at least get them started. He's trying to say, okay, listen, maybe I'm nuts and maybe I'm wrong directionally about what's going to happen to Bitcoin, but maybe I'm right. And if I'm right, I don't want you to effectively being short Bitcoin by not owning any of it. And so I tell people that let's get started. It could be 0.5%, 1%, 3%. Let's get started. Let's build it. And over time, I think you're going to be rewarded. But certainly you can't look at it every day. It's up today. It was down over 2 weeks. That's how it works in the Bitcoin marketplace or the cryptocurrency marketplace. But over 3 to 5 years, I think we're going to be very well rewarded, Rob, for what we're doing.
Yeah, and I agree. And so, Anthony, first of all, thanks for coming on. Really appreciate it. Also, thank you for introducing me to Algorand. I did a deep dive video, which I'll be releasing pretty soon. I think that's one of those sleepers, and I think that's one of the things that your clients are going to be very happy that they invested into. And we'll get into deep into that next time.
I've got $250 million in Algorand right now. I think Algorand will be the Google. I'll just say this quickly. You and I, when we were youngsters, we were logging onto the internet using Alta Vista. We were using Lycos, America Online, even Prodigy, if you can remember that.
Oh, yeah.
And then, lo and behold, in 1998, this company came along called Google. And people are like, well, why the hell do I need that? I've got all of these other instruments to access the internet. And then people say, well, it's faster. It has machine learning. The algorithms are more widespread. It's going to lead to better outcomes. And lo and behold, Google trumped everybody. And I think that's going to happen with Algorand. I think ultimately when the big enterprises get on to the tokenization side of the market and they start working in the world of DeFi, they'll need something that's scalable like Algorand, secure like Algorand, and ultimately decentralized, so they won't have to worry about capricious inflation, deflation of what it is that they're using as a form of exchange of value. So Algorand, to me, is the future. It's just going to require more and more people doing deep dive due diligence and making the decision to choose it.
Awesome. Well, we'll have you on again. We'll do a deep dive, both of us, but that's it. So thanks so much, Anthony. Let's jump back.
You. All right. God bless, Rob.
All right. So I want to thank Anthony SCARAMUCCI for stopping by. That was great. Mindset, very important stuff. And just before we go on, and talk about some other things. So just so you know, the plan still is to, if all those margin calls and everything else, is to use the bank, get a loan, pay this off, and then have that money freed up, and then pay back the crypto loans, because it's a lot better to do it that way than to have these margin calls and everything else. It's always best to use somebody else's money, and if the bank's going up 4%, not so bad. So the next part I want to talk to you about is why. Why did we do all this stuff? Why is Chewy here with us? Chewy is one of my dogs. He's 13 years old and pretty good. So the whole thing is, as far as like why, well, why not? Because the big thing is this, is the reason why we do all these things. It's not to flex on somebody and to just show everybody just, how much, and just accumulate and accumulate and accumulate. Because here's the thing, if you're watching this video, you're probably one of the few people in your household, potentially, that wants to invest, wants to do better things, wants to accumulate a little bit more to take care of people in the future. And that's what it really comes down to. Up to you to do all these things, because no one else is going to do it for you. You're going to have to be the one that actually probably provides for a great deal. So for me and my wife, it's all about providing for the family and the people within our circle, because we know in all honesty, no one else is going to do it. So we have to take the reins. And then the great thing about, doing these things and actually having a little bit of extra money is that you can do the things that you want to do, move to Puerto Rico, travel a little bit, or take care of things that are important to you in your life, right? Look at Chewy right here. Chewy, 2 months ago, was diagnosed with lymphoma. And during that time, if it wasn't for the chemo and the immunotherapy, he wouldn't be here. And that's just how it is. 13-year-old dog. I mean, there's only so many things that we can do. So when we do these things, we can help out the people around us. Also, like, I know that for me, my family, like my mother, she suffers right now from moderate dementia, and to a pretty progressive form. So some days are pretty good, some days are not so good. But as time goes on, I mean, it's going to be up to us to really take care of those people around us. So just remember that the things that we do, that we try to do in crypto, it's so we can take care of the people around us in our circle. And that's it. So look, if you like today's video, give it a thumbs up. Also consider subscribing. A lot of things to talk about are time sensitive and all that great stuff. So thanks so much for joining. See you in the next one.